All right, welcome back everybody to Altcoin Daily. My name's Austin. It is official. The crypto market is again back up above $2 trillion as Bitcoin, as Ethereum begin to recover. A very positive sign as a crypto investor, but that does bring me to my next obvious question. Who are the ones that are buying? Well, in today's video, that's exactly what I want to discuss. We'll talk Bitcoin, we'll talk Ethereum, we'll talk the latest news involving altcoins, and much more. Because if you're interested in making money with cryptocurrency, click subscribe right now. We drop a video every single day demystifying this cryptocurrency market. Let's jump in. First things first, let's go over the data and actually see where is the buying pressure and where is the selling pressure coming from for crypto in these last few months. Over the course of this Bitcoin drawdown, buying pressure has been mainly during US and EU trading hours. Meanwhile, the majority of sell-side pressure has occurred during Asian market hours, suggesting a divergence in regional strategy. So the United States and European Union are the ones buying the Asian market's bags at the moment. And here's the data. Bitcoin US and EU month-over-month price change. We can see as early back as March 2020, it was the EU and US accumulation that took us from around 3K all the way up to 69K. Now, while the US sort of stopped before the top, it was the EU that had heavier purchases in March through May, the top of the crypto market last year. And where we are today, the US and the EU have moderate buy pressure at the moment. So, what do you think? What does this tell us? Well, it tells us we're seeing the most buying during US and European market hours when they're open, and we're seeing the most selling during Asian market hours. Plain and simple. We will have to keep tabs on this, but let me know down below if you're siding with the Asian markets or you're siding with the US European markets. Who do you think is right? Next up, what about Ethereum? Who is buying Ethereum? The Ethereum price hits $3,000 as a major crypto fund we now know adds over 110 million Ethereum, US dollars of Ethereum, to Lido's staking pool. So fresh data suggests that it was Three Arrows Capital which staked at least $110 million worth of ETH into Lido's liquidity pools. So what's interesting is Three Arrows Capital is actually not an EU/US based hedge fund. They're a Singapore-based hedge fund manager. They provided liquidity worth over 36,000 ETH to Lido's Curve ST ETH pool using a third-party ETH wallet. And why did they do this? Well, number one, they're showing us by their actions, they're telling us we believe in this network, we want to support the ETH network. And number two, they want that passive reward. Now, it is interesting that they didn't choose to stake their ETH into ETH 2.0 contract. They could get yield from that as well. And at the moment, only 8% of the total current ETH supply has been staked into the ETH 2.0 contracts since its introduction in December of 2020. And if I had to guess, I would say it's because that Lido and Curve are both providing more yield, more interest than the ETH 2 contract. I'll keep you updated. Next piece of news for altcoins besides ETH, Grayscale has just launched a smart contract fund for Ethereum competitors. And what does this tell us? This tells us there's a growing investor appetite for alternative blockchain networks besides ETH. The Grayscale smart contract platform X Ethereum Fund, that's the name, also known by the ticker symbol GSCPXE, is the company's 18th investment product. The fund will provide exposure to 7 smart contract platforms at the following weights. So Cardano and Solana lead the pack. They have the highest weightings of 24 and 24, then Avalanche, then Polkadot, Polygon, Algorand, and Stellar, which is surprising because we don't really think of this as a smart contract platform. But either way, this does show us the demand of what investors are asking for. They want exposure to cryptos like this. Now, as an Ethereum holder, should you be worried? Well, no, Grayscale has, plenty of products with Ethereum in it as well. And if we just look at the stats in general for Ethereum, Ethereum continues to dominate the decentralized application space, meaning the Ethereum network still clearly has the most dApps being built on it. On the other hand, The Ethereum network accounts for just over 55% of the TVL, total value locked, on DeFi protocols, down from over 96% of January of 2021. So Ethereum is losing dominance in that regard. I guess those other protocols that you can lock value up in, just giving a better yield, just giving a better percent APY. All right, let's keep tabs on this. And by the way, if you're looking for the cheapest place to buy cryptocurrency, I'm talking literally zero fees. Check out sponsor of the channel, the FTX app. It is on both iPhone and Android, and truly, you can buy Bitcoin, Ethereum, Dogecoin, altcoins, all with zero fees. There is a link down below, check it out, and use the link and/or use code Altcoin Daily and receive a free coin every time you trade at least $10 worth of crypto. And next piece of lower cap news for Symbiosis Finance, which is a multi-chain liquidity enabler. They have officially launched their beta version of their mainnet. And what does this mean if you hold Symbiosis? Well, it means that Symbiosis Finance aggregates decentralized exchange liquidity across any EVM, meaning Ethereum, and non-EVM network, so many networks, swap any token and transfer liquidity. So this is a huge step forward for interoperability for crypto. And let me just share with you an example to illustrate this. Example of buying SYS on the Ethereum network with BUSD, Binance stablecoin, on the BSC network. Now before, these networks were usually siloed, yet you would have to do everything on the ETH network or everything on the BSC network, and there weren't many options to make that interoperable. So give me your thoughts on this down below. Love to see progress happening for interoperability. And next piece of news involving the Sandbox. This was a very interesting interview on CNBC with the Sandbox's own Marcus Blache. We know the Sandbox is killing it with the partnerships, but what else do we know about the Sandbox? Listen to this 90-second clip of Marcus sharing what to expect in 2022. And it's all about incentivizing UGC, user-generated content. Watch this.
As the Sandbox is a UGC world, actually we're seeing a lot of interest from creators that want to create video games. Like we have a part of the Sandbox is we have a portfolio of products that are made for UGC, for user-generated content. So we have a tool that's called Game Maker, in which you can build experiences, you can build houses, you can build museums. We have another tool that's called VoxEdit, which is really to design assets and equipment, avatars used inside the Sandbox. And we see various use cases of small teams of game developers that are building experiences for themselves or that are building experiences for one of the many brands that are already inside the Sandbox. We have partnerships with Adidas, with Gucci, with Snoop Dogg. And we have communities like random users that are building for them now. They used to be teachers, they used to be working in tech, but now they went into the space and they use Web3 to change their the area of work. And one vision that we also have is we want to create new jobs that can be right now just the creation of houses, like it's architects, it's digital marketeers, it's really any classical job that you can think of. We want to find use cases or an equivalent inside the Sandbox or inside our metaverse.
Very interesting. Cool to get those insights. My final question would be, though, is because the Sandbox is just killing it with marketing and partnerships, are they ever scared that the Sandbox will just turn too corporate? Is there such a thing as too many partnerships? Well, they are actually thinking about this. Watch this.
The real life is going to continue to exist. There's always going to be the real life, and we're still gonna we still have to breathe, we still have to get out, we still have to eat, we still have to be in this space. There's a concern on our side as well that we are very conscious about, that we don't want the Sandbox to become a platform with a lot of ads, with a lot of just posters everywhere, like brands entering, which is why we really focus on our community, on brands that want to build utility and bring content to the space, and that don't want to exploit the users end of the day. And part of also our long-term vision is to build our foundation, the governance of the Sandbox, which we want to give back to the users. So if the users decide, hey, we don't want this, then it's a common decision for them to decide this.
Okay, very interesting. Very valuable to be able to hear this insight. And that is the video. My name's Austin. Like always, see you tomorrow. And be sure to join us at the biggest Bitcoin conference of the year. That's Bitcoin 2022. Link down below, and use coupon code Altcoin Daily for 10% off. See you tomorrow.